After $750 million worth of deals done, 1.5 million square feet under management, 2,800 projects engineered, 10 companies launched. After 37 years, I've got 5 lessons learned that I want to teach today. Stay tuned. Hey everybody, Greg Barron, Professor of Real Estate. Thanks for joining me today on my channel. I've got 5 things today that I want to convey to you. And if you want to know why I'm an expert of anything, it's because I've failed at so many things in my past. But I want to give you 5 things that you can work on today that maybe it'll help you. So number 1 is focus. You know, one of the few things I remember when I went to grad school was from my marketing professor. She said this to us. She said, if you try to be an expert at everything, you're going to be mediocre at most things at best. She said you have got to focus until you become an expert, and then you layer it and you move on. So focus is number 1 on my list. If I could look back on my life, one of the things that I have a great weakness at is getting distracted. I get distracted with other business ventures. I get distracted with other ideas. I tend to think that I can be an expert at anything because I have codified knowledge. But the fact is, until I become totally absorbed in something that I want to execute, I don't need to move to something else. So as far as investing is concerned, we're bombarded with so many things that we could go after. As it relates to real estate investment and acquisition, or maybe even disposition, the number 1 thing I would tell you is concentrate on an asset class. Now, I've told this story a couple of times. I've got a company that we deal with in the North Texas area that only deals in one specific asset class. It happens to be Class B industrial. We've got we've got several others that only deal in multifamily. And as you pare it down, there's some that only deal with Class B plus multifamily or Class A flex space. So not to confuse you too much, but you really need to focus in on an asset class or an investment vehicle and get extremely proficient in this particular investment vehicle before you move to the next. I am the world's worst at this. Anybody that's been around me very long knows that I can take a rabbit trail. You know, there's a squirrel. On just about any conversation. I'm just an extremely curious person. But what I've found in my older age as I've looked back is I wish I could have focused more in my life. Let me give you an example. We have multiple businesses, most having to evolve around the real estate development, construction, engineering, software, financial modeling space. But I had this crazy idea that I could be an expert at anything. So we launched a landscaping company a couple of years ago. Spent hundreds of thousands of dollars developing it, mainly because I wanted to squeeze some margin out of some of the properties that I had. We bought the assets, we hired the people, we went on a headhunting mission, we developed it all, only to find out we were not very good at being in the landscape and irrigation space. It was a hard lesson to learn. It was different from our core operating companies that we had, and had I would just spent the same amount of money staying in my space, I wouldn't have lost as much as I did, and I probably could have done more with the valuable time that you have. So if you're thinking about entering into the commercial development or commercial real estate space, maybe you're moving from single family or duplex home and you want to move into a more elevated commercial kind of investment, try to hone in on an asset class until you're totally comfortable in speaking in that language. Focus in on it before you move to something else. And I might add, if you're looking at this video in 2024, my suggestion is you've got opportunities coming up in Class B industrial and a lot of opportunity coming up in the multifamily space. I'm staying away certainly from office and some retail. We might enter into the self-storage space, but again, our own company is going to focus specifically there because our investors want us to do that too. They want to know that we have codified knowledge in this asset class so that we'll be experts in it so that we can squeeze operating expenses, increase revenue, ultimately produce net operating incomes, and exit internal rate of returns that would help all of us. So number one is focus. Number two, if you're getting into the business or currently in it, is always remember cash flow is king. There's a reason why 20% of all businesses that start fail within the first year and 45% of businesses fail within the first 5 years. And you want to know the number one reason they fail is because they run out of money. Now, let me tell you a few of the non-negotiables for me and my businesses that I cascade down to everybody. Number one is you've got to have a rock solid accounting system, and do not let this get away from you. You need to close every month on specific dates. You need to drive this accounting into your system so that you know every month when you're going to close and what you're going to see as a result of that close. Now, I can tell you that once you do close, you're already 30 days lagging behind. So you're already dealing with numbers that are already aged. If you don't close every month, no matter what you're doing, if you have 1 unit, if you have 400 units, if you have 4,000 units, you need to close every month on every property that you have, and you need to roll that up into your accounting system on a consolidated basis and stay on top of it. Do not negotiate anything less with your staff. Don't allow yourself to have that weakness kind of rise up in you. Close every month. The next thing that's a non-negotiable with me is I have a flex budget. Simply put, that means that I take my current data, I enter it into the month that I close, and it's forecasted out for at least the next 12 months. I want to be able to predict my revenues, my operating expenses, and ultimately what my net income is on a monthly basis. And every time I close another month, I insert that into that budget, and then it moves those figures forward. So create a flex budget so that you can have a type of predicted, forward-looking performer for you. And it's amazing how you set these goals, how closer you come to meeting them. Now, granted, there's things that pop in that are going to distort it. Your operating expenses are going to be higher. Sometimes they're going to be lower. Sometimes your net revenue is going to be a little bit lower, a bit higher. But you got to have a flex budget that you use. So you're closing and you have a flex budget. The next thing I'll say is stay on top of your accounts receivable. Now, let me tell you a saying that I always go by. It's you teach people how to treat you. You have to stay on top of your accounts receivable. If they get latent, the first thing that you need to do is reach out. If you have to reach out personally with the phone call, try to be the squeaky wheel that gets greased. Try to be the first one that gets paid. Collection of those receivables is vitally important. If one thing I've seen in my business units over the years is people get lax in collecting. The farther you go from the time that you have created that revenue to the time that you collect, it's amazing how distorted that narrative gets, and the more reason it is for that payer not to pay you. So stay on top of your accounts receivables. The fourth thing within cash flow is you have got to learn how to financially model. And really this comes at the beginning when you're doing your due diligence. A lot of people are still calculating with what I call a big chief pad and a number 2 pencil. They don't have a system to even determine if that project is a really good project. Now, not to be too salesy, but either a robust Excel system that's out there or something like we use, and we've created a Performa Plus type of financial modeling, of financial evaluation software. You have got to learn how to use this and how to do what I call sensitivity analysis. Take a conservative approach. Insert different data points of escalation rates, of inflation, of increasing operating expenses. Unless you have a financial modeling software or you've got a great Excel system, you're really not going to do a lot of really good predictive analysis whether that project is even worthy of your time and effort. The last thing that I'll touch on in cash flow is measure. Measure, measure, measure. I have another saying that goes like this: you cannot improve what you can't measure. You have got to have measurements all along the way and break it down as much as you can. I wouldn't have 15 points of measurement, but you need to have what we call KPIs, key performance indicators. Those key performance indicators should measure revenue, they should measure expenses, and they should also measure margins. Now, if you don't know what margins you should measure, I'm going to put a link below that might help you to determine what you should look at on a monthly basis. You also have a lot of margins in your real estate deals. You know, it starts with debt service coverage ratio, debt yield, those kinds of things that are going to be tied to your bank covenants that you're going to have to supply to the bank if you're getting any lending. So every month, spit out those margins and compare them to year over year and month over month. So number 3 on this 37 years of lessons learned is I have learned how to pivot. You've got to learn how to adapt and implement. Trends are always changing, so you've got to be absorbed in what those trends are so that you'll be able to adapt to them. There is one salient thing by most successful entrepreneurs that I see over and over and over again is their ability to pivot. I call it being resilient. There's a lot of information out there. There's a lot of stories of really successful people, how they hit rock bottom and they reset, they reinvented themselves. But look for trends. Look for things that you can adapt to. Specifically in the real estate space, you need to understand what's happening in the particular asset class that you choose to be involved in. And then you need to pivot to adapt your strategy to align with whatever is happening. One of the things that we watch all the time when we pivot is what are our competitors doing? I'm not saying I want to copy all of them, but I certainly don't want to reinvent the wheel. I don't necessarily want to have this blue ocean strategy that nobody else has thought of that's going to change the world. I'm not going to come up with this great disruptor. I'm more of one who improves on what somebody else has done, or I look at what somebody else has done successfully and I mimic it. We've got a business unit right now in our facility division that we have across the country. And I can tell you one thing that we're doing is that we're looking at the huge companies and their processes and what made them successful. So learn to be resilient in your marketplace. Look at what your competitors are doing, pivot, adapt, and execute. The fourth thing, which is a really hard lesson to learn, is invest in the best people that you can and let them do their job. You cannot do everything that's needed with all of the things that you've got to do in your entrepreneurial endeavor. Now, as you're first starting out, you're going to be the chief bottle washer, you're going to be the janitor, you're going to be the accountant, you're going to be the marketer, you're going to be all those things. But as you grow, if you don't invest in really good people that you can pass the baton to and that you can random sample as you go, you're going to find yourself working your tush off. So you have got to invest in really good people when you have the ability. When you invest in really good people, there's another saying that I have. I got a lot of them today. It's slow to hire and quick to fire. You're going to have to take a lot of time in determining what personalities are aligned with you, and there's a lot of tests that you can take out there. First off, you need to find out what your personality trait is, and then you need to align it with those that would most effectively complement your own personality, because if you do, it's going to go like this, and you're going to butt heads. There could be a top performer that is not aligned with you, and you're just going to drive yourselves crazy. So you can test, but you need to invest in top performers, and then you need to subordinate those activities. You're going to have a lot of things that you're going to have to do. I'll give you one example. I absolutely hate, and I'm not very good about it, of balancing a checkbook. Back in the day before you could go online and do it digitally, we had to do it manually. I would prefer to have a root canal than to have to balance a checkbook. But then I hired an assistant that absolutely loved to balance a checkbook. She was happiest and in heaven if she could have 10 checkbooks, that's all she did was balance them. She got a great amount of joy at that. I hated it. So I subordinated my weakness and I elevated my strength, and I had to find out what it is that brought me joy and what it is that I didn't like to do, and I subordinated that. Find out what you love and what you're best at and do that. You're going to have a lot of seasons in your life where you're going to have to do a lot of things that you don't like to do. So you want to find those things that really leverages your strengths and subordinates your weaknesses. You're going to be much happier in your journey as you continue to build your business and hopefully your real estate empire. Now, the one thing I will say about hiring the best people is it doesn't absolve me of my responsibility to trust and verify. I always jump back in and random sample. I am a provocative questioner. That's a Peter Drucker quote that I use all the time. So when I'm meeting with these people, these superstars that hopefully I brought in, I random sample things, I ask provocative questions, and then I pass the baton, and I assume most of the time that they're going to execute to the best of their abilities. Number 5, and one of the most important things, is sell and market your company. If you don't have revenue, it doesn't matter how much you squeeze your OPEX or your operating expenses, you are not going to survive. You are going to be the chief revenue generator. You are going to have to lead at sales and marketing. Speaking of marketing, we now have so much more available than when I had 37 years ago when I started to increase our marketing efforts. Digital strategy, channel marketing, social media, all of those things, now that cost is being down, and it's very strategic and compartmentalized of the people that can help you. Initially, you can do it with contract. We have it internally. We have a media group, we have a marketing group inside of our company, but if you're starting out, you can offshore those things. There's a lot of things you can do in marketing now that you couldn't do 37 years ago. Understand digital strategy right now and how you can get your message out to the market, whatever that is. The other thing about sales and marketing is you have got to understand your product, whatever it is, through the eyes of the customer. One thing that I've recognized is when we sit around in staff meetings, we tend to devise our strategy around what we're feeling. And I always go, no, what is our client seeing? What are the optics of what they want? How can we satisfy their pain? How can we create solutions for them through their eyes? If you will look through the eyes of your customer and ask questions through the eyes of your customers, you will be miles ahead of your competition. 2 more things in sales and marketing. Be the company that's known for creating solutions. If you're trying to do a value add on a multifamily building, for example, the latest trends are dog parks and those amenities. Try to be that first out company that creates solutions that's going to draw in those customers and is going to satisfy the things that are most painful to them or that they want. So always ask yourself, am I creating solutions for my customer? And last but not least is, once you get a customer, do everything that you can do to keep them. It costs you a lot of money to get those clients. It costs you a whole lot more not to retain them. So in selling and in marketing, we always talk about what can we do to retain this client? What can we do to create solutions for them? So getting and retaining clients should be one of your number 1 goals. You should always ask yourself the question, what are we going to do to help retain the clients that we have, make them a raving fan of us so that we can go on to create other value on the product that we're trying to sell. So those are the 5 things that I would do with my 37 years of experience. I hope that helps you today. As always, be sure and like and subscribe if you like the material. And as you know, educate, evaluate so that you can ultimately execute to create your own personal wealth. See you soon.